Today is Monday, February 26th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS's Senior Financial Economist. Steve, let's start with the grain markets this morning. What did the USDA say about the 2018 and 19 corn, soybean, and wheat supply and demand last week?
A lot of people think that they kind of punted the whole big picture down the road. They pretty much came in line with a lot of the trade guesses. The only surprise was that they lowered the soybean carryout more than what the market thinks. So a lot of that has to do with a little bit lower crop number and quite a bit higher export number. A lot of people think the big Brazil crop this year is going to cut into U.S. exports and make that number higher when it's all said and done.
What's the latest on South American weather? Is Argentina still dry? Is that the cause that's pushing soybeans and soy meal to new highs?
Yes. We're now talking about a bean crop below 45 million tons out of Argentina. That's about 9 million tons below the USDA number, and a corn number that's maybe below 35 million tons, which is about 4 million tons below the USDA number. So all in all, it's helping our corn export demand a little bit, but more importantly, it might help our soybean meal demand, and that's pushed beans to new highs. And at $10.50 in the nearby contract, now people are talking about $11 beans.
Great. Also, Steve, can you comment on the first outlook for U.S. 2018 spring and summer weather? March 1st is only a few days away. How soon will we be seeing some planters in the field?
Well, it's kind of a mixed bag because, first of all, our weather guy thinks we're going to have a wet April, which could delay some of the corn plantings. And we'll see if that catches anybody's interest as far as corn prices and maybe a little bit lower acres than what the USDA said. The other thing that we'll be looking at is that he thinks that there's been 7 years since 1950 in which La Nina has gone away in the first quarter of the year. In all 7 of those years, we've had a little bit drier and warmer summer in the western corn belt in those years. So right now he's thinking that we could actually see a little bit drier and warmer summer in the western corn belt. Now, will that change things dramatically? You know, on our farm last week, we got 5 inches of rain, which is really helpful because the soils were dry. And so we can go a long time with these February rains now. But we'll just kind of see what the summer brings us.
Alan, last week the St. Louis Federal Reserve Bank President James Bullard warned that too many interest rate increases this year could slow the economy too much. Do you agree with that statement, and do you feel that it will change the outlook for Fed policy now?
I believe that is correct, that too many rate hikes could slow the economy, and there's already some talk that there could be 4 rate increases this year, which I do not think will be the case. In fact, I am looking for now only 3 rate hikes. So I think it's steady as she goes, so to speak, with the Fed likely to raise rates, but not at an accelerated pace.
The S&P 500 futures were able to trade higher on the week last week and are higher again this morning. Anything change in regard to your sentiment that the long-term uptrend will continue?
No, I don't think anything has changed. Of course, we did see that severe setback recently, and that was quite rattling to see that much pressure. But since then, we have come back quite dramatically. So I do not think that we are in the beginning stages of any long-term bear market in stock index futures.
Back to interest rates, the 30-year Treasury bond futures took out a double bottom at 134.04 last Wednesday, taking the bonds to the lowest level since December 2014. What is the outlook for the 30-year Treasury bond futures now?
Well, now that double bottom has been taken out, there has been some short covering and a bit of a bounce. So I'm looking now for some type of congestion pattern, some type of consolidation situation to develop. But ultimately, I do believe that we will see a new leg down in the 30-year bonds. In fact, the Treasury futures market, I think, will remain in a bear market mode.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.